Yes, hello everyone. This is Martin. I'm here to quickly take you through this pair. I want to share with you guys what we are looking at and what we are anticipating, what we expect probably next week or later in New York. So, but before we look at what we are expecting, let us first look at how this pair has been performing and the reason for its reversal. So basically, we've been looking at what we call institutional reversal setups. I've tried to elaborate more about these institutional reversal setups. When you look at our chart, we had a resistance at this point. We had a resistance level here. The resistance level here at this point. Yeah. So the market was making higher highs. When it reached here, it created a resistance level. So now price moved down for 2 consecutive days. That's close to 300 pips. Then after, the market went back up and grabbed liquidity. So you remember we talked about our culprit candle, which is this one, which grabbed liquidity. So now what we had to do was to wait for the price to break structure. Then price came and stopped below. I told you there are 2 ways of looking at break of structure. One is using closed bodies. Another one is using wicks. So since this is a higher time frame, I'll consider these wicks. So price came and broke structure to the downside, then went back up into our fund, which grabbed the liquidity to completely mitigate. Then it pumped down 500 pips. So now that's good for people who swing trade. It was a good setup for people who swing trade. Okay, others can say it was head and shoulder, blah, blah, which is okay. I cannot dispute that. But nevertheless, these patterns always have a hidden meaning. You should always understand what does a head and shoulder mean. Why that playbook? Why do they use that playbook over and over again? Since we all know that the market will always give us heads and shoulders, why don't we always wait for them to play out? The reason why we don't wait for them is because we don't know the psychology and the intention and the reason why they give us that playbook. So now this is the reason why that playbook of heads and shoulders is very, very crucial. So it's better for you to understand the reason behind the playbook than cramming the shape or the pattern as heads and shoulders. So that's the reason why the market always give us heads and shoulders, because it is an institutional reversal pattern, and they will always try to play. They always try to play the same exact way, because it is the only way they can manipulate the market. It's the only way they can come after us who don't know what we are doing. So basically, I always urge you to understand why the same playbook is being played over and over. So it's basically about, it's all about understanding the psychology behind the playbook. So now after mitigation, the market pushed to the downside. So now as the market is coming down, we are waiting for this man at this point. So we have 2 stopovers. We have even another stopover here for people who trade support and resistance. So we may expect him to come down there. But on a bigger picture, we have so many stopovers from down here. This is grab liquidity here, block structure, and never came back. So in the long run, the price has to come back down here where liquidity was grabbed. Then it went up, it grabbed liquidity here, then the market came back here. So this one was sorted. This one was sorted. Then the market still came here, grabbed liquidity below this level, then pushed, never came back. So which means this one is not yet sorted out. So we expect the market to have a stop over here. So when the market reaches this point, we might say reverse, because this is a mitigation point. This is also a mitigation point. But before coming down, we have smaller time or lower time frame mitigation zones. So we have the one here on 20th. On 20th September, we had one at this point. So to cut the long story short, let me take you to H4. Just to share with you what we are looking at and what we're expecting. But I've shown you all possible mitigation zones. But when we come to our H4 time frame, let me take away this. So this is the reason why the market, but this is the reason why the market stopped here. But furthermore, this is interesting. Furthermore, on this time frame, on H4, we had this candle which grabbed liquidity from here. So break of structure here, then the market went back and pushed down. So we had an entry here. So still now the market also broke structure again, then it came back, still in this zone, it came down, then another grab of liquidity was here. So even if you are not a swing trader, we had some intraday setups. You had grab of liquidity at that point, and the candle which grabbed liquidity, I guess it is this one. So we had a perfect sell last week. So liquidity was grabbed at that point. At that point, liquidity was grabbed. So now, block of structure was broken to the downside, then the market came back. So this was a very good selling point. You guys, you remember I shared this sell in our Telegram channel, but I never gave a breakdown analysis. So that's why we had that sell on that. That's happened last week. So since then, CAD has dropped close to 500 pips. So now we have another market maker set up here. So the market was going up, making higher highs. Then we had a liquidity grab below here, which I can call trend interruption or any other, but basically it is all about liquidity grab or a market maker footprint. So we have a footprint here, which is very, very, very clean. I have a very clean footprint at this point. At this point, you have a very, very clean footprint. So now the market will give us a higher high, a higher low, a higher high, then it came and swept below this. So now, let me remove this. So now our interest is at this point here. So you see this liquidity grab, the candle which grabbed liquidity, this one which grabbed the liquidity. So now we are expecting a reversal, not a very big reversal, but it's like a pullback, can be a pullback of close to like 200 pips, 100 plus pips from this point. So now this is a very good mitigation zones, because this bank A, as I usually tell you, I denote these banks A and B, or the institution A dropped the price very fast, then another one took the price up. So now they are coming back to this zone to mitigate. They close off their positions. Those who are in negatives will be in positive. Then they close their positions. Then they'll go in for buys. So, guys, they're expecting a buy at this point. So probably USD card might reach here today, later in New York, or early morning, or during Frankfurt on Monday. So basically, anytime, it doesn't matter whether today or Monday, it is okay for us to do what? To do that. So basically, I want you also to note something. Basically, for people who swing trade, I want you to look at this here. Why did he stop here? Let us also try to look at that. Why did he stop at that point? Why did he stop at that point? So let us go to H1 and C. Did we have a manipulation? Yep. So now, this is what I was telling you guys. That even here at this point, this market was pushing up, giving us higher highs, higher high. Then all of a sudden, we had this manipulation, these two red candles pushing down very fast. Then they grabbed a little bit of liquidity below this, giving us flat prices, but they grabbed the liquidity below this move there. Then you can see the speed at which this guy left the zone, but he never came back to the zone to mitigate. So he never came back down fully to mitigate. That's why when he came back at this point here, that's the reason why we had these buys at that point. I don't know whether you guys are getting my point. That's why we had that let me zoom in a little bit. That's why we had price coming down to this zone. That's the reason why we had this buy here. And it pulled back, then it came down. So we're expecting to have the same thing here. Let me show you. Because when I look at this here, I'm expecting this price still to come further down to this zone, anywhere in this zone, because we have this pullback, went up, came and grabbed the liquidity. So it might even come a little bit down there or anywhere below here in this zone. So we're expecting the same thing here. So we're expecting him to reach this point here, give us a pullback. Because when you look at this here, we have what you call liquidity grab. So we're expecting this guy to come in this zone, because this is the candle which grabbed the liquidity. Expecting him to bounce off there from this point there. Then next week, we are expecting him to make another push there. Then still another push up. This playbook can take like 2 or 3 weeks to play out, but it doesn't matter as long as we know what we are doing. So then coming back down, because down here I told you we have more mitigation zones which are missing. So the market will eventually reach here, even here, as we monitor the performance of the dollar. So basically, we shall analyze this as we go forward. Let me remove this, but I've given you a bigger picture. So this is what we are expecting today or next week on USD card. I don't usually trade USD card, but this one will give us an insight on what's going to happen on pound. So those of you who are looking at pound, you can attest to that pound is now trying to push the upside vis-a-vis this one. But this one has also to first push to the downside. Because when you look at pound is struggling to push up. But in the process, we are monitoring what USD card is doing and what this is doing. So those of you who attended my Zoom yesterday, you can see the way pound is moving. Pound is moving very slowly. then USD card, sorry, Euro USD is making good moves today. So I told you about correlation, which one is being held, which one moves fast. So you can easily check that. See, gold is also being held, moving slowly, even this one. So we're expecting this to push down here, then we can have a reversal to go back and collect, because this market has to come down here, then it goes back up to completely cancel out this playbook. Because the playbook now started from here down, then it has to go back to mitigate, then start a new playbook like that. Now, this playbook started here, the market came down, then went up, then the playbook was over. Then we have this one started here, the downside. But along the way, we have a minor playbook. So we might have this one here, small pullback, then come back, finish up here, or first complete down. It doesn't matter. So guys, thank you. This is what I wanted to share with you guys. Thank you, thank you, thank you, thank you, thank you. Thank you guys, thank you, thank you.